So let's just recalibrate and let's go over the total cryptocurrency market cap. Then we'll take a look at Canton Coin's price action, do a quick update on that. Take a look at some levels as well on XRP and what could play out risk on, risk off this week to set the tone. Alrighty, so real fast, we're just going to review the fundamental backdrop that I wrote for you guys yesterday because the landscape hasn't significantly changed. The only thing really that I saw overnight was obviously, of course, the vote on the Japanese front. The Japanese finance minister or the Japanese prime minister, excuse me, won the election. I put that information in the fundamental section. That was really the only change. We had some yen strength into the Asia session, then rolling over into New York, which I feel like is one of the things keeping risk assets suppressed. We also saw some profit taking in the dollar, and we saw some demand pent up for gold. Gold popped back above 5 grand. Yeah, 5 grand. But outside of that, there hasn't been anything shaky or too worthy of our attention just yet. We do have some Fed speakers coming up here in just a couple of minutes, if I'm not mistaken. Actually, they might have just recently spoke. Where we at? Where we at? Where we at? Myron speaking. Yeah, so in just a couple of minutes, they should be speaking coming into this afternoon. So we'll be attentive to all of this once we get off this call and anything that's worthy of our attention in terms of updates and rhetoric from the Fed speakers. I'll make sure to let you guys know in the fundamental section. So let's just recalibrate and let's go over the total cryptocurrency market cap. Then we'll take a look at Canton Coin's price action, do a quick update on that. Take a look at some levels as well on XRP and what could play out risk on, risk off this week to set the tone, as we've been probably one of the most accurate communities, if not the most accurate community on the internet, covering these things intraday, level to level. So let's continue to do that. And then we'll roll over into my MNQ trades for today, and I'll break that entire aspect down for you guys from A to Z. All right. So starting off here, yesterday, February 8th, 2026. The total cryptocurrency market cap has remained supported above the $2.3 trillion level over the weekend as we head into the new trading week. And that was, of course, yesterday at time of writing. Prices haven't really substantially changed. You can see that price is still at 2.38 trillion. So literally the same place yesterday when I wrote this article for you guys. And this article should give you guys a clear perspective what to pay attention to in the coming days ahead. What's going to be dropped in terms of the fundamentals, the data, the geopolitical headlines as well that we should be mindful of. Okay. So if you didn't already read it, make sure that you go back and you read it on your own terms so you understand it and it's soaked into your own subconscious and conscious way of thinking. Price action has been relatively stable, and importantly, the weekend was much quieter than recent ones from a geopolitical headline perspective compared to prior weekends that were driven by escalating rhetoric or sudden shocks. Markets had some breathing room, which helped maintain support at current levels. On the Iran-US front, which has been our key focus and still remains our key focus as we have some talks coming up this week ahead. Iranian President Masoud P. struck a more measured tone ahead of another round of nuclear negotiations expected next week. Following mediated discussions in Oman, he emphasized that Iran's stance on nuclear enrichment is rooted in its rights under the Non-Proliferation Treaty, stating that Iran responds to respect with respect, but will not yield to a coercive language. Iranian officials are signaling openness to dialogue, but only within the scope of nuclear negotiations while continuing to reject U.S. military escalation in the region, which is good for now. Okay. So you can see on Friday, it mentioned a step forward in the negotiations, which is slight positive rhetoric compared to what we were getting previous to that, but it still does not solidify anything. Iran's chief diplomat Abbas A. reinforced this message by stressing sovereignty and independence, particularly significant as the country approaches the anniversary of its 1979 revolution. While Iran remains unwilling to abandon civilian nuclear enrichment, even under the threat of further military action, Aragachi, hopefully, I don't know if that's how you pronounce his name, but anyways, the gentleman acknowledged that negotiations remain the only viable path forward. At the same time, Iran's top military leadership warned that any direct attack could ignite a broader regional conflict. Of course, I highlighted that in bold because that would be a case for concern this week if we saw those headlines escalate, which would have severe long-term consequences for regional development. For markets, this keeps geopolitical spectrum finally balanced. Constructive rhetoric, obviously, of course, supports stability, while any escalation would likely drive risk off flows. For crypto to hold and recover above 2.3 trillion, the key is continued restraint and progress towards diplomacy rather than confrontation. So we'll be mindful of this moving forward in the coming days ahead. Turning to the Greenland US situation, which still lingers in the background. Diplomatic talks over the weekend were described as positive, which again, for now, is good, though uncertainty remains. And you can see that in the headline here. Greenland's foreign minister, Vivian M., acknowledged that discussions are ongoing and that it is too early to determine where negotiations will ultimately land. Denmark echoed this view, noting that while the situation has improved compared to a few weeks ago, the underlying tensions have not been fully resolved, which for now, again, just still leaves the door open for further confrontation. Hopefully, it continues to de escalate and drives market sentiment back risk on. These talks stem from a broader framework agreement involving NATO and focus on Arctic security, an area of growing strategic importance as melting ice opens up new shipping routes. The U.S. has raised concerns about potential Chinese and Russian influence in the region, while Denmark and its allies dispute the immediacy of that threat. If these discussions continue without amplifying uncertainty, they could help stabilize sentiment and support a return to risk-taking behavior. Conversely, of course, any renewed friction or any aggressive posturing would likely push capital towards safe haven assets, i.e., demand for gold, dollar, or possibly even the yen in some cases. All right. On the Russia-Ukraine front, because that's still obviously, of course, lingering in the background as well. Ukrainian President Vlad, oh man, I get this guy's first name wrong every time. Zelensky stated that U.S. wants the conflict to end by June, which again is another positive thing. Okay, and what I like about this is this kind of aligns with that summertime timeframe recovery that we've been discussing in this community, which would be positive. And if confirmed, both Ukraine and Russia have been invited to participate in talks in the United States next week. While no official comments have yet come from Washington or Moscow, that was yesterday of time of recording, I got to check back on that. The U.S. has been pushing for a resolution since President Trump returned to office. So you can see that in the rhetoric here. Despite the diplomatic efforts, though, Russia has continued attacks on Ukraine's energy infrastructure, leading to widespread blackouts during winter conditions. Zelensky acknowledged that major obstacles still remain, particularly around territorial concessions, and emphasized that while the idea of a trilateral leader meeting was discussed, significant preparation is still required. Any tangible progress towards de-escalation here would be a meaningful positive catalyst for broader market sentiment, including crypto. Continued conflict, however, of course, just like the other two geopolitical tension hotspots, Greenland and Iran, still remain lingering in the background. And if any conflict ignites itself, it could obviously, of course, cap upside in risk assets. Beyond geopolitics, the Japanese political developments and yen volatility still remain an important macro risk. Any surprise intervention in the yen could trigger any aggressive unwinding of carry trades, which historically puts pressure on risk assets, including crypto. This is a key external factor to monitor, especially during periods of thin liquidity. If the United States markets continue to grapple with expectations around Federal Reserve policy, investors are also pricing in a more cautious stance towards quantitative easing under the new Fed chair nominee, Kevin Warsh. So outside of the geopolitical backdrop and the finance ministers on the Japanese front, possible yen interventions, we're also still being mindful of the hawkish rhetoric that we've seen from Fed speakers, that in which we have a couple of speaking here in just a couple of minutes. Alongside generally hawkish rhetoric from several Fed speakers in most recent weeks, as long as the market perceives limited support in the form of rate cuts or liquidity injections, this remains a headwind for risk assets. On the flip side, any shift towards a more dovish messaging or data, particularly the data, we need to see the data, that strengthens the case for easing could spark a relief rally as markets would most likely start to price rate cuts in. This brings us to this week's key data and earnings. Okay, this is going to be a very important part here when I go over my MNQ trade. But I said attention will center on the delayed January U.S. labor market data and the CPI inflation data. Non-farm payrolls are expected to rise by 70,000, up from a previous reading of 50,000 in December, while the unemployment rate is forecasted to hold at 4.4%. Wage growth is also expected to cool slightly, which would be constructive for easing inflation concerns. CPI is projected to rise 0.3% month over month, with core inflation also expected to slightly tick higher, which is not good. collectively speaking. Retail sales, housing data, and other secondary releases would add further context to the broader economic picture. Alongside the data, we have corporate earnings, and then they will remain in focus with major companies reporting across consumer, tech, and industrial sectors. Ideally, markets want to see earnings that confirm economic resilience without reigniting inflationary fears. I'm going to highlight that in bold. We'll come back to that. Any significant disappointments could add pressure to an already fragile market sentiment. From a crypto perspective, the ideal backdrop is easing geopolitical tensions coupled with cooling inflation and labor market data without recessionary risks, which would support the case for rate cuts later on in the year. Lower inflation remains one of the most powerful potential catalysts for improving crypto valuations as it reduces uncertainty around tighter monetary policy. So let's pause right there and cover that backdrop real fast. And the total cryptocurrency market cap, before we become overly optimistic of a full-blown recovery, as we mentioned in previous updates, let's go back. When we were trading in this consolidation range from roughly around November to December, and we had anticipated that if the market could not break above the $3.46 trillion threshold, it would be a case for concern, as there was likely a aggressive seller that existed in this leg that would be passively defending if price came back up into it. That speculation and that analysis was correct. Buyers got trapped, sellers defended, trapped buyers then became aggressive enough to push price lower. So now this is not our new bullish or bearish leg that we need to engulf and see prices above. Now this one is, right? So this is now our new most immediate price action that we need to be mindful of. And before we become too overly optimistic, same thing, how we were discussing back in those days, we now need to see buyers. If price can manage to come back up above these levels, we need to see buyers at each of these levels constantly trap sellers, then become aggressive enough to break up into the next level. Same thing. If sellers try to make an attempt to defend, we need to see buyers trap them at lows and then become aggressive enough to continue with the overall bullish momentum. I'm not getting overly optimistic in the total cryptocurrency market cap for a full-blown staged recovery and complete shift out of this market sentiment until we see a couple of these different factors. The things that I just mentioned in the report, so easing geopolitical tensions and escalations, dovish rhetoric and sentiment from Fed speakers supporting rate cuts or quantitative easing, support for the overall economy, data that supports rate cuts, so cooling in the labor market, cooling in the inflationary readings. Couple that with profit taking in safe haven assets like gold, silver, the dollar, the yen, any profit taking in safe haven assets that could roll over into risk taking. In terms of the technical aspect of things, I would like to see a break above the two most higher and upper level dark pools at 2.62 trillion and then 2.89 trillion. The last things that I would like to see is a triple moving average crossover. We're right now on the daily time frame, and you can see that at time of writing and recording this video breakdown, the triple moving average is acting as a resistance. I would like to see that crossover, and I would like to see the triple moving average start to act as a support on price. If we can see those things coupled with a firm and sustainable break above $3.2 trillion, i.e. an aim to start to target these highs, then I will become optimistic that whatever happened over the past consecutive, let's just say 60 days might be behind us, and we could possibly see higher prices, right? But until we see all of those factors, I'm not getting overly optimistic. And right now we have a very far stretch away from that to actually happen. So the first level to the upside this week that we're going to be mindful of if we see a risk on market recovery is going to be, can we hold above the $2.3 trillion threshold? And can we see buyers push price back up into $2.62 trillion? That would be case number one for a bullish scenario this week. Buyers hold support at 2.3, trap sellers, become aggressive and push price up into 2.62 trillion, possibly even up into 2.8. Another case for the bullish scenario would be if sellers temporarily gain control over buyers, buyers then reposition back down at the dark pool at 2.05, trap sellers, reaccumulate orders, then become aggressive enough to push price higher. That would be bullish scenario number two. Heading over real fast to Canton Coin's price action. In recent video breakdowns, we had highlighted that we needed to see buyers hold sustainable bullish move above the 18,194 cent psychological level, and that if we did not see buyers hold above that level, that would be a case for concern for a sell delta held pattern, which currently, in my personal opinion, is still playing out. Right now, sellers have held buyers at the 18,194, defended against the buyers at the 18,194, trapped them in highs, and we have seen price turn around from that level. Right now, I'm still being mindful of this 50 EMA that is coinciding with the 14,801 cent psychological level. So to the downside right now on Canton coin, I'm still being mindful of a possible drop, a liquidation event taking place beneath over-leveraged buyers that exist beneath these lows, and a nice smooth drop down into the 14,801, where I will start to look to accumulate some Canton coin. That'll be my first bullish scenario that could possibly play out is if we can see sellers push price down into this dark pool, but then buyers defend, trapping sellers, becoming aggressive enough to push price back to the upside. That could be a bullish scenario that leads us into higher prices. Obviously, of course, we need to break back above the 18,194, turn it into support, see buyers make an aggressive attempt to smoothly transition through the 19,214 before we can see any higher prices, but a sustainable hold above the 14,801, buyers then flipping and becoming aggressive enough to push price back into the highs, in my personal opinion, would be a really great overall price action on Canton coin for a continuation move. Another bullish scenario is if we do not see a drop down into the 14,801 and we see the 16 cent region hold, i.e. buyers that are in this area that clearly became aggressive over here to the left-hand side with enough momentum to push price up into the highs. We're able to hold sellers at this area, trap them, and then just continue from here. That would be another case for a bullish scenario this week. If we did see price break above the 19,214 to the upside on Canton, the next levels are 22 to 26 cents before we could possibly see some profit taking. So just be mindful. So right now on Canton, I'm just paying attention to that 16 to 14,801 cent psychological level to see where price could take us. In terms of XRP, XRP kind of honestly just mirrors the total cryptocurrency market cap right now. You guys can see that we dropped straight down almost to the T into that dark pool at the $9 region. We have now popped back up above the dark pool at $1.39. So same thing in the total cryptocurrency market cap. If we can see buyers hold this as a support, trapping sellers and becoming aggressive enough to push price higher, the next level that we need to see buyers break and have a sustainable hold above is $1.60 before we get too optimistic on XRP's price. If we can see that, then the next level above $1.60 is $1.97. That would be bullish scenario number one. And if we saw something like this, you can see the triple moving averages would likely start to see a crossover. And then that could be a case for possible higher prices or a fuller recovery on XRP. Again, another long stretch away from where we're currently trading at. So let's see how the week plays out. Another bullish scenario that we could see on XRP is, again, just like in the total cryptocurrency market cap, if sellers do regain control temporarily, they could push price back down into these lows, back down into $1.09. Then we could see buyers defend, trap sellers, and become aggressive enough to push price back up into the highs. So to the upside, $1.60 and $1.97 would be the immediate areas we need to see XRP price break above before we get excited about higher prices. I'm sure we'll have an update before those levels come into fruition. To the downside, working my way backwards, starting with XRP first. Very plain and simple, if we do not hold above $1.39, that is going to open the door for a revisitation of $1.09 as our first bearish target. If sentiment deteriorates and worsens further, that still opens the door for a possible revisit of 91 cents all the way down to 69 cents as our lowest level dark pool. If we can break 91 cents, or if we do see prices come down into these areas, I will be aggressively accumulating XRP, and I might even consider opening up a leveraged long position on XRP if we were to come down into the 69 cent threshold, with maybe a stop loss at like 50 cents or something. Canton coin. If we break below the 14,801 cent psychological level, which is right now our first bearish target, we see sellers overpower buyers at that level, turn it into a resistance that is going to open the door most likely for an immediate drop down into the 12,257 and a full-blown pullback from this previous bullish move. Anything below 12,257, I personally think right now is slightly off the table, but still possible. So below 12,257, just in case, we still have the 09453 and the 0580. But I think that that's a little bit outstretched right now. As for the total cryptocurrency market cap, I do not think that this is going to happen right away. If we were to see these levels come into fruition, I think that what the market makers are going to do over the next consecutive couple of days is allow for some form of a market recovery to build some liquidity beneath lows in the form of over-leveraged traders that think that the market is about to just flip back risk on overnight. And so with that being said, if the scenario that I mentioned, i.e. breaking above the higher levels and engulfing all of the sell pressure does not take place, and we start to come up into these premium areas, we need to be mindful that we could still see a scenario like this, where markets get hopeful of a recovery, the sellers that exist in this area just trap buyers, and then we see a full-blown liquidation event. If at any point in time we did see prices below $2.3 trillion and we did see sellers aggressively pick up below 2.05, remember that the lowest level dark pools right now that we have on our radar are 1.81 trillion and 1.74 trillion. Those levels are still very possible. So something like that, or just a failure to hold above the 2.3 trillion from where we're at and a drop down into those levels is something that we're going to be mindful of this week as a possibility. I'm personally, because of the geopolitical backdrop and some of the rhetoric around Iran, Greenland, and some of those things being slightly dialed back, I'm personally leaning more so towards consolidation to possibly a start of a recovery, but we'll see how things unfold later on this week. All right. So real fast before we roll over into the MNQ, just taking a look at the calendar, the coming days ahead. Tomorrow we have core retail sales, employment cost index, and scattered Fed speakers to be mindful of. Wednesday we have the non-farm payroll and the unemployment rate that was delayed from last week that is going to come out, coupled with scattered Fed speakers. Then on Thursday, we have the unemployment claims and some more scattered Fed speakers. And then the highlight will be on Friday with the core CPI month over month and year over year.